Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Monday, November 29th, 2010. I hope everybody had a happy Thanksgiving here in the U.S. This morning I'm talking about the secret is out, and at least that's what we're learning this morning when we get news of this report coming out that this news site WikiLeaks has apparently leaked a bunch of classified information that really all it's done is it's sort of a bit of an embarrassment here to U.S. politicians and officials. But in the grand scheme of things, I'm not really certain it means anything. Although there could be ramifications for people involved and for our troops and things like that abroad. This really is more about just sort of adding fuel to the fire. I mean, it's kind of nice to know that indeed we still engage in espionage, and that we haven't just decided that intelligence is a bad thing, and that we're still trying to keep the U.S. safe. So that's sort of the first thing we learned this morning. The second thing we learned is that Ireland actually has gotten a bailout of about 113 billion euros, and the market doesn't seem to like it too much. Part of that bailout means that senior bondholders won't have to pick up the tab for the bailout, and Ireland's going to be forced to pay about 5.8% in interest, which is a little bit more than they would have liked, a little bit less than Germany would have liked. So all in all, this is about what everybody was expecting. Ireland didn't have to give up too much, but the important thing to note from this agreement is that going forward in 2013, bonds issued after that date, they won't be guaranteed. So this seems like it's more of like a patch job than an actual solution. So we're going to have to figure out what's going on there. Okay, and lastly, the other big thing going on this morning is what's happening in Korea right now between North and South Korea. Kim Jong-il, who's doing his best weekend at Bernie's impression. I'd be surprised the guy's even still alive. They're just seemingly trying to rattle the cage, trying to get both the U.S. and China to be pitted against one another. So we're going to have to see what happens there. But I have a feeling that this is more going to heat up a trade war between the U.S. and China than anything significant happening over there between North and South Korea. So what that does is it adds up to risk aversion in the markets. All right, we have a negative bias towards Asian currencies, but also towards some of the risk currencies. I just want to show you here. We're looking at Aussie versus CAD. Okay, you can see that for some time since back in June, all right, the Australian dollar appreciated versus the loonie, and that has mostly to do with interest rate differentials. Well, now you can see a little bit of a minor double top in there. We're seeing the Aussie pull back a little bit, and that's strictly due to this Asian deal going on in Korea. Not to mention that Australia may be done with rate hikes for a little while, and Canada's rate hikes may be just starting to pick up. All right, they're coming out with their GDP figures tomorrow, and if this looks good, folks are saying that Canada could be the next to hike rates. So that's what we're seeing here. I'm expecting the Canadian dollar to strengthen against the Aussie dollar for a little bit longer here. All right, let's just take a look at the euro. You can see euro's down. It's trading a 130 handle now. All right, we've just about broken through the 50% retracement level on the daily charts here. All right, so I expect this isn't going to hold. We're probably going to see around 128 here sooner than later, perhaps within the next, maybe not even be weeks, could be days the way this market's moving. But right now, nobody's really impressed with this European bailout deal, and people are still afraid that this is going to spread now to Portugal and Spain. If bonds issued after 2013 aren't going to be insured, perhaps they're going to try and step it up to start getting these out the door a lot quicker and refund some of this debt. So we're going to see how that goes down. All right, we've also got the pound lower. Pound is kind of mixed today because it sort of gets a little bit of a flight to safety bid from people fleeing the euro. Yet they do have exposure to this whole Irish deal. Right now, there's not really much happening in Great Britain this week from a news perspective. So I expect it to sort of trade back and forth between both risk and risk taking and risk aversion. All right, we got the dollar. Let's look at just dollar versus yen. You can see dollar strengthening here on the daily chart, just up to about 84.30. All right, this is due primarily to dollar strength, which has been driving the market. We have this Korean problem, which can affect Japan greatly. Also here in the U.S., Just wanted to note that we're going to have U.S. non-farm payrolls out on Friday. That's always the big granddaddy of all the economic releases here in the U.S. because that's going to show us whether the employment picture is turning around. We're still expecting 9.6% unemployment, but we'll have to see if we've added more private sector jobs, which could bode well for the economy going forward. So, just when you think things couldn't get any wackier, we knew that last week was going to be a light week because of the Thanksgiving holiday here in the U.S., but the markets don't disappoint. We've got North Korea here trying to basically pick a fight between the U.S. and China. All right, we have the EU changing some of the rules about the debt crisis. I don't know who's going to buy these bonds in 2013, these senior bonds, if they're not guaranteed. So we're going to have to see what happens there. But this is more of the case of let's just kick the can down the road, get out of it today, and worry about the details later. All right, and then lastly, we're going to see some more dollar strength, I think. The geopolitical risks that are out there have really just counteracted any of the effects of QE2 here. So I think we're going to see some continued dollar strength. I think we could also see some stock market selling as, the tax rules are bound to change next year. So, you might get some changes as tax rates go up there. So we could see some selling, which could have a positive effect on the dollar as well. So that's what I'm looking at today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.